All right, good evening, good morning, welcome wherever you're joining from. Welcome to a Monster Money educational webinar. Today we are focusing on why fundamentals matter. So, I think a lot of beginner traders completely disregard fundamentals, focusing a lot on technicals, and this is why we see a lot of beginner traders failing or just having a very tough time in general. Of course, with experience, we do get better, and with experience, we learn the importance of fundamentals. So today is hopefully that step in your journey where you learn the importance of fundamentals, and I'm excited to take you through this. So what we'll be covering today, we will be going over some beginner mistakes with regards to fundamentals and just overall looking at technical analysis as well. So why technical analysis just doesn't cut it. I've already done a previous video on technical analysis, diving deeper into order flow, tying it in with fundamentals as well. But I think this is just a little bit more focused on fundamentals. If you do want to go and have a look at that and get a deeper understanding on the technical side, go and have a look at that. I'll see if I can put the link up here somewhere. Forgive me, I'm new to the YouTube game, but we'll sort that out. Also going over day-to-day news and headlines, how to deal with that, how to plan for that, and how to be executing on that. And then lastly, we'll be looking at market sentiment and high time frame trends. So beginner mistakes, relying too heavily on technical analysis, patterns, indicators, support and resistance, etc. So we come into trading, maybe you buy a course from someone on Instagram and it's just very technical focused, very heavy into the technicals. Like I say, chart patterns, indicators, guys trying to sell you special indicator, all these funky things, all these strategies based off technical analysis. And we just need to understand that there's more going on behind the scenes than just simple patterns, and that these patterns are not always reliable. We need to actually be looking a little bit deeper than that. All right, we will dive a bit more deep into that point shortly, but let's just move on to the next one. Chasing trend reversals and not understanding what is driving the market. So this is a big one. This is a very, very big one, and I don't know what it is. It's obviously just a psychological issue that we have as newer traders, not understanding the game, not understanding that if we could rather just get our little piece of the pie and be happy with it, move on with our day, we're going to be a lot more successful in that way. Rather, beginners want to come in, catch a reversal. We've had this massive uptrend, and then all of a sudden, there's a head and shoulders, and we sell, 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 thinking we're going to catch it all the way back down to the previous lows and make a whole lot of money. But the reality is, you don't need to be making a whole lot of money on one trade. You will get there eventually, but you'll get there by simply chipping away, building consistency. I always say you're not going to get rich with one trade, but rather 1,000. So we need to understand that what is actually moving price here? It is the fundamentals. When you see that uptrend in price, there's something going on behind the scenes driving price in that fashion, continuing to create higher highs based off something going on fundamentally. So if you do see a head and shoulders forming while you're uptrending in price, if you understand that that uptrend is there because of the sentiment and the reason for that sentiment, which whatever it may be, on gold, for instance, over the last few weeks, we've been extremely bullish here ever since that improved CPR, and since we've had the Fed being a little bit more neutral to dovish, just seeming like they may be taking their foot off the gas with interest rates, and we've seen that sentiment fueling this uptrend here. So at no point until, let's just block out this area here, at no point there was any reason to really jump back into that bearish bias because the Feds weren't coming in extremely hawkish or anything. Nothing was changing that sentiment, and we saw a bit of dollar weakness over the past few weeks. So now, if you were a beginner looking at simply patterns here, you may have seen on numerous occasions, maybe right here, a double top, and then the market continued to move up. So as a beginner, you would be chasing that double top, thinking, oh, sell, sell, sells. You'd get involved in these sells on the way down, and you then in that mode to be selling. You're chasing that trend reversal. Market goes against you, and you're just stuck there wondering, what are you doing? So if you could understand that, all right, the sentiment hasn't changed. There's no reason to be chasing these sells. Yes, maybe you could get in on the intraday time frames, catch some of that pullback, but don't get too greedy with the sells. Don't think that you're going to catch those sells all the way back down to the lows from November, because the sentiment hasn't changed. So that's just something to take into account. And then disregarding or not taking the time to look further than the economic calendar. So I think that a lot of beginner traders do at least have access to an economic calendar. They do, or everyone has access to it, but I think a lot of guys are looking at it at least. And maybe they're doing their Sunday analysis, taking note of what events are happening through the next week. But that's about it. And then you don't really factor it into your trading over the coming days, and that's something that is extremely important. For instance, over the last week, we've had FOMC on Wednesday this past week, and we had NFP on Friday. Now, last week, if I'm not mistaken, I think last week Thursday, Friday, this week Monday and Tuesday, we did not take any trades, and there were some possible opportunities, but overall we could just see that the market was a bit choppy. But also knowing in the back of our minds that we had this high impact news coming up, we were just a bit more laid back. And you know what? Come FOMC, we destroyed FOMC. come NFP, we destroyed NFP, and we made back. Well, we didn't need to make back anything because, like I say, we stayed out. But if you had been fighting the market in those ranges leading up to that high impact news, you would have just had a very hard time. And if you were lucky, you would have maybe just made your money back trading that news, catching some of that clean uh, volatility there. But if you can just understand the timing and actually use the economic calendar to plan out your week ahead, look a little bit further ahead, also understand which events are holding more weight, which are just possible noise, which events could maybe just bring pullbacks. But yes, let's move on to the next slide here. So these are some beginner mistakes to just look out for, and we will discuss some of these in further detail and how to actually correct them. So why technical analysis alone is not enough? Like I've discussed before, and I discussed in the previous video on technical analysis, patterns are completely random. All right, there's no reason to say that a double bottom is destined for price to move up. If the market is printing these random patterns from random orders being placed all the time, the patterns aren't reliable. We need to understand that institutions and whales, so the bigger money that's actually moving price, these guys are not looking at chart patterns. They're not even looking at candlesticks. They're looking at real world events and data. All right. And price movement is driven by order flow. Order flow being orders coming into the market. Orders coming into the market from these institutions and whales. These are the guys who are really moving the markets, not you and I. You know, no retail trader is having any significant effect on the market. So we need to understand that these big guys, the big money, these guys are moving the price of the markets. And our goal as retail traders is to really just ride the wave and get our piece of the pie and be happy and move on. We don't need to be doing anything fancy. We don't need to be coming in first place. But we need to understand how these guys are thinking, what is affecting their decision making. So planning out your trades, looking at certain economic events coming up, understanding which hold more weight. Because, like for instance, now we're speaking about FOMC this past week. Over the past year or so, the central banks have been fighting inflation, they've been raising rates, and this has had a massive effect on the market. This is what's been driving the sentiment, the direction of price over the last year or so, since we had the COVID and Russia and Ukraine tensions die down. That's what's been driving price, is the central bank's monetary policy. So last week, for instance, when we had the central bank or the Federal Reserve coming out with the interest rate decision and their press conference, that held a lot of weight because the dollar, one, is the world reserve currency, and two, like I say, their monetary policy has been holding a lot of weight over the last year or so. So you can see in the week leading up to FOMC, as these bigger players, these institutions and whales, were waiting to hear what the Fed had decided, waiting to hear if they're coming out more hawkish or more dovish. We can see that these guys were kind of just sitting on the side, and we saw the prices in a range. We saw most of the current events had been priced in, and these guys were sitting on the side waiting for this start to be released. So now as a retail trader, how can you expect to be placing trades, high probability trades, betting on the direction of the market when these big guys don't even have an idea of what's going on yet? They're waiting for this news to set the sentiment so that they can put their orders in, which will drive the market, and then that's where we catch our wave and we get our piece of our pie, like I said. Right. Day-to-day news and headlines. Now, like I discussed a little bit with the economic calendar, I think a lot of guys are looking at these things at least. But I just want to give you guys some pointers with approaching this. So very important, just a general tip, zooming out and building an overall market image or story, building a story of what price is telling you is extremely important. So like I was referring to gold a little bit earlier on with this uptrend here. If we go back to the left and we look throughout 2022, we had this nice downtrend throughout last year, which came from the central banks raising the interest rates, the Fed raising the interest rates. So if we zoomed out and we built up an overall story and market image, we, in theory, wouldn't even really need to take into account fundamentals. I don't want to say that because actually having that fundamental understanding is going to be incredibly important, like I say, to build up that overall market image. But if you just zoomed out here, for the most part, we respected this bearish structure basically until November, forming lower lows and lower highs. So like I say, if we can build up this overall story of what's going on in price, that's going to help us with our day-to-day news because we'll begin to understand, is that news being released today going to feed into that overall sentiment, or could it potentially bring pullbacks? So zooming out and building an overall market image is extremely important when it comes to day-to-day news because this can help us to understand what phase of the market are we in. If, for instance, we go back to gold, we see for the last few weeks we've been trending up here very nicely, and we had some news coming out on any particular day. That news could either feed into the current sentiment and continue to drive price up, or it could keep price in a range if it came out more neutral or let's say negative for the dollar. Because obviously while we were moving up here on gold, the dollar has been a bit weaker. So if now, let's say, your news on whatever day, whatever news it is, comes out good for the dollar, you could see something like this. Maybe this day we had some positive news for the dollar, but understanding the overall um, market here, the overall structure of the market, we can see we were still bullish, and that bad news or good news for the dollar just brought a pullback and just set up for better prices. So that's something to look at. News that is going against the overall trend sometimes will give us pullbacks and set up for better continuations in the direction of the overall trend. Learn to filter out the noise. So when it comes to headlines, you got to be careful with reading headlines. You got to be careful with news. There's a lot of nonsense news out there. Understand who is funding these media giants, these news outlets. They're not always the most reliable. Sometimes they are pushing a bias, and we cannot trust what we are watching on CNN or BBC, Fox News, whatever it may be. Just got to be very careful. Look for more reliable sources and try and rather look at the data and try and start to understand that data yourself. The numbers don't lie. All right, so filtering out the noise, understanding also some news events will be lower impact, and like I just mentioned, how some news, even if it comes out against our overall bias, it could just bring pullbacks and just set up for better trades in the overall direction of the higher time frame trend. So understand that, sometimes, let's say, I was just referring to that uptrend on gold. Maybe you had negative news for the dollar on any given day, and we had that push down, but we were just setting up for better buys because we understood that that was a lower impact event. And it wasn't going to change the sentiment or anything. But when you have something like FOMC, for instance, if now this past week the Feds came out extremely hawkish, we would have seen that set the sentiment, and we would have began to be a lot more bearish on gold. So understanding the data is also very, very important. Understanding how the numbers are coming out. That's going to help you with your day-to-day trades if you are trading in and around times of news. Because if you can learn to understand the numbers and paint out different scenarios for yourself, you'll really give yourself an edge over the guys who are just placing their buy stops and sell stops and simply gambling on the news. So that's why I've highlighted here, no gambling. If you've seen the way that I trade news, I'm obviously not saying that I am better than anyone or that you should do what I'm doing, but I'm just giving you some insight to what I've had success with. Waiting for numbers to come out on these news days and actually just having a look at what the numbers are saying. And if you've had those preset expectations or scenarios planned out, and you can see that the numbers have fallen into your one of your planned scenarios, then you can take action on that plan. And if it doesn't work out, then you can reassess and learn from what you did wrong. See how and why price reacted to the numbers the way they did, and you'll just get better and better. So when I first started looking at the economic calendar and how the news was coming out, sometimes the news would come out good and price would drop, and it wouldn't make sense to me. But as I gain more experience, I'm understanding how certain things are priced into the market, understanding the difference between the forecasted numbers and the previous numbers. And like I say, having these different scenarios planned out is extremely beneficial to just being prepared and having that edge, like I say. Because, for instance, now let's just refer to gold here with NFP. So for the members, we had planned out that if numbers came out better than forecasted and better than previous, we would be looking for sells. So the numbers came out extremely, extremely good for, let's just have a look here. So numbers came out extremely good for the dollar on Friday, and we executed on these sells based off our pre-planned expectations here. So you can see the numbers came out better than forecasted and better than previous. And I did already touch on this, but understanding how does the data feed into the current sentiment based off where price is at. So is this data going to, this also goes back to just having a plan, understanding how the markets will most likely react to the data based off how the numbers come out. But will this data feed into the current overall trend? If it comes out good, for instance, if it comes out bad, could it bring us pullbacks, and could we still just be setting up for better buys, for instance, in line with the overall trend? Lastly, market sentiment and higher time frame trend. So newer traders especially, but sometimes even more experienced traders, tend to get sucked in and lost when simply looking at price on the intraday time frames. If we zoom out and base our directional bias off the higher time frame, as well as understanding the underlying reason for that sentiment. So actually understanding, like I say, for instance, if we refer to last year with the increasing of rates, we saw a very clear bearish trend in gold. and the sentiment there on gold was obviously bearish. The reason for that sentiment was the increasing of rates. So if we are looking at those things, we are able to identify way better opportunities, as the higher time frames and overall market sentiment will always hold more weight. So when we are in these pullback phases or consolidation phases, those are periods where we need to be a little bit more conservative and a little bit more patient, lower risk. And if we're taking all of these factors into account, it helps us to identify when we are in those pullback phases, when we need to be less aggressive and focus on capital preservation. So to keep it simple, trade the trend. Just trade the trend. You're not going to completely understand fundamentals just from this video or just today or the end of the week. It's going to take time and experience. But for now, the biggest point I can leave you with, something you can actually do, is just focus on trading the trend. Thank you guys so much for watching. I really, really appreciate your support as always. And I hope that you've taken away something. I hope that you did like the video. I hope you found it educational. No Lambos here, no flexing. I'm just trying to give you guys some value and insight to elevate your trading, take you to the next level, focus on what really matters. And that's what we do here at Monster Money Trading. So, cheers everybody. Take it easy.